guys, welcome to the YouTube channel, and here we're back again with another one. And this is our current market. I just want to give you all a secret, and like the thumbnail says, it is a secret when it comes to a 1 hour fair value gap. And right now we are on the 4 hour time frame. It's just gonna be a quick video, and it's gonna be a lot. This is just actually what you need for 2026. And I want to say this is a very solid strategy. People pay a lot of money for this, and I want to give it for free. So all you can do for me is to click this subscription button and give me a like, and let's grow together. So yeah, I want to use this current market on this 4 hour time frame. The current market, that's what I'm going to be using. And we are going to be specific on our POIs. POIs, point of interest, the level you believe we move price to the direction you want. So what we are actually going to be using only for our POI is order block. Order blocks. This is what we are going to be using, only order blocks. So if you don't know what an order block is and you want an explanation, just say that in the comment section. I'm going to make a detailed video talking about order blocks. So now this is another block. We are just going to be using this range. I've not back tested it on this market. I trade only gold, and we are going to be doing our analysis on gold only. This doesn't mean it doesn't work on other pairs. You just need to back test it on other pairs and see if it works there too. But I have not back tested it on other pairs. This is the only market I trade. So yeah, this is another block, a valid order block on the 4 hour time frame right here. We are going to be using the 4 hour time frame and the 1 hour time frame. Now you can see this is a valid order block right here. Now the strategy is very, very simple. All you have to do is to get a valid order block level and wait for price to react from that order block. And you can see price traded into this order block right here. And we go down to the 1 hour time frame. Right here you can see how price tapped into the order block on the 1 hour. Yeah, you see how price tapped into the order block right here and failed. You can see this upslide, this up move. This candle failed to break structure, but it created another block, a fair value gap rather, right here. You see, this is the magic of the setup. We mark a valid order block on the 4 hour time frame and wait on the 1 hour for price to react from it and create a fair value gap. And right here you can see price created a fair value gap right here. Let me say this is a very risky, this particular pattern is a very risky pattern where the market failed to break structure before, or the market fails to shift structure before creating that fair value gap, or after creating the fair value gap it failed to shift structure before giving an entry. So this could be a high risk trade for you, or you could just risk it. But most of the times probably this won't work out. Where there is no shift, it won't work out. But some of the times it also work out. So you just need to you just have to be intuitive about it. So right here we can see we entered from the 50% of the gap, always the 50%. Then your stop loss should be at the high or the low that forms the fair value gap. You see this candle right here is this candle 1, 2, 3 is the candle that formed this fair value gap. So you put the high at the fair value gap formation. So if it is a low, it's a bullish fair value gap, you keep it 1, 2, 3. This is a bullish fair value gap, you keep it at this low, because 1, 2, 3 are the candles that form the fair value gap. So this is a bearish fair value gap. 1, 2, 3 form the fair value gap. So you keep your stop loss at the high, and you can target 1 to 3, 1 to 4. So this is about 1 to 5 or 1 to 6, thereabout. Okay, probably almost 1 to 7, I think, and it was a beautiful trade. You can see that. So let's go back to the 4-hour time frame and see if we can get another one. Right here is another one, but price did not complete the range. Yeah, right here is another block. Go to the 1-hour time frame. And you can see price tapped into the POI, traded higher. The maximum number of a bullish or bearish order block has to be 3 candles. 1, 2, 3. If it is 4, don't mark the 4th one. Always focus on the 3 consecutive candles. So sometimes it could be 1, 2, 3, 4, 5, 6. Just focus on the number 3. I don't know why, but that's how we just did it. That's how it is. It works better that way. That's just what happens. Price will usually retrace back to the 3rd candle rather than the 4th candle or the 5th candle. So when you see multiple candles like this and price displace them and creates a market structure shift or change in the state of delivery, just focus on the first 3 candles. So right here you can see how price shifted structure. Now I'm not focusing on the high, I'm focusing on the 3 candles that completes the other block, a valid order block. So 1, 2, 3, and you can see this bullish candles breaking above that high of the candle. So yeah, this candle right here, this move displacing above this candle is also a valid bullish candle. Bullish change in the state of delivery or market structure shift on the lower time frame. But here is the CID, the change in the state of delivery. Now you can see it created a fair value gap after that move, which is this one. But price failed to tap it and moved higher and broke this. And the moment it broke this one, the completion, the moment it did that, it created another fair value gap right here. And as you can see, price retraced back to that gap. Always the 50% of the gap. And so on a normal, I would have kept my stop loss on this low right here, on this low, because 1, 2, 3 formed the gap. But why I won't do that? Not simply because of what is it called? I will not say because of share picking or what's the word? I'm looking for that word. What's the word? Hindsight. Now you might think it is because of hindsight that I will leave it here. No, I will not leave it here because this candle, this specific candle, is too insignificant at this moment, because it is hiding inside this candle right here. So simply because this candle is hiding here, I will usually not put it here because I will see it as insignificant and price might destroy it. So rather I will keep it at the low of this one, because this candle is literally hiding inside this one, so I will see it as insignificant. So that's it. And you target whatever 1 to 4, 1 to 5, and as you can see, it was a beautiful trade. Now the interesting thing about this setup is it is precise. It is, if you back test it, the result you get is the result you get when you are trading this, when you are trading it live. You know, there are some strategies you back test, you have good results, but when you are trading them live, removing the emotional part of it, but you are trading them live, you take losses back to back. This is not that kind of strategy. This strategy is precise, where if you back test it, your back testing result is the same with your live executions, because what you are getting is actually what you are getting live. So there is no mistake in the analysis. You are always precise. You know what you want. You know what you want to see and things like that. So it's precise and it's beautiful. So this is it. So give us a subscribe and a like, and give us a comment, and also tell me how your first trade goes using this strategy. It's a beautiful strategy and you're gonna love it. This is actually all you need for 2026. Yeah, see you in the next video, and please don't forget to subscribe and give us a thumbs up. See you in the next video.